the heart and soul behind every business. Stories. Welcome to Business Story of the Week, hosted by me, Joshua Laurie. From setbacks to comebacks, from tragedies to triumphs, we inspire entrepreneurs through conversations that matter. Witness the magic that turns dreams into reality. Whether it's your career, business, or life, your success is always one story away. This is Business Story of the Week.
Hi, this is Tom Suvansri, and welcome to the Business Story of the Week.
Fantastic. And that is the man himself, Tom. He's our guest for today. And of course, I am your host, Joshua. Every day, every week, every show, we ask you a question. And the question for today is, how can we break away from traditional financial planning to achieve true freedom, true financial freedom? Or is traditional financial planning still the way for financial freedom, so to speak? Well, Tom is going to discuss all of that, talk to us about all of that. Maybe define financial freedom today. Is it any different? How has it evolved, basically? Tom is the perfect guy. He's our guest for today. Born in Lower Merion, raised in Cherry Hill, and a Penn State grad, Tom adds a ton of value to the Perennial Pride team as a specialist in advanced insurance strategies and investment analysis. Tom is a tremendous asset for clients looking to take control of their finances due to his analytical strength, his focus on serving clients, and his feeling of responsibility towards others. In addition, Tom has had success with real estate investing through the ownership and management of various rental properties, as well as participating in private lending arrangement. Tom has got it all. He's got the experience, he's got the insight, and today he is going to be talking about all of that. Tom, thank you for coming on the show. How are you doing?
Joshua, really excited. I'm excited to meet you and talk about all this about financial freedom. It's a buzzword that you hear all the
It's a
time,
buzzword.
right? And we all have our own meetings. But I'm really excited to share, and hopefully your listeners get some value.
I love that. And of course, before we really get into that, I want to talk about that, by the way, the financial freedom. But I want to talk about it in the sense of where did, what was the young Tom like? What was the origins of Tom Suvansri, right? Uh, what the young Tom think about, was he always thinking about financial freedom? What would the young Tom say to the Tom of today?
Yeah, it's crazy. It's a really fascinating question because you go through life, and especially like gotten older, my kids have gotten older, you start reflecting on kind of how you were raised and the things that
Hmm.
sort of stood out to you.
Of course.
And I never in my just like a lot of families across the world, right? I know your audience is international. But the topic of finance is typically not talked about in families, right? It can be that taboo topic that it's a little too sensitive. Like when you get into politics or other things, like you can't talk about them. But I think people put so much stress on it, like it should be talked about, right? It's a very important aspect of our lives. And I never really heard about it growing up. Parents really talk about it. They were immigrants from Thailand coming over to America and, setting a course to build their own financial freedom. They were looking for it, right? But they weren't educated. And so they couldn't educate us as children. So I do remember growing up and watching my father, start a family. He was a physician, so he started family practice. Great physician, bad business owner, bad financial manager, right, of his world. And unfortunately, he never got the advice and education around it. And unfortunately, it didn't end very well for them. And I watched that. I watched that growing up and, thinking everything was rosy, but, and obviously we never had those conversations, but walking in and learning about how mismanaged their lives were, money flowing in, money flowing out, and they never got to save and invest and grow their wealth. And unfortunately, it ended poorly for them and into bankruptcy. And so I watched the experience of that, and it really influenced the way I think about money. I was just eager now to learn more about it because I didn't want that to happen to me and my future and family. So it really impacted me. So I just started learning as much as I possibly could. And it just sort of stuck with me through my entire adulthood and to life now.
Of course, you are a Penn State grad, like you mentioned in your bio, in your information, Tom. And what was the particular? Of course, like you said, you observed this in your family. You wanted to make sure it would never happen again, so you studied it, you learned it. Was there a particular pivotal moment for you where you decided this is what I'm going to study? What was the journey that you took to Penn State? But also, did you always know, like from that experience alone, did you always know you were going to get into financial management?
No, no,
Wow.
absolutely not. I started off as a background science in biology and chemistry. I was in research, and at some point, I sort of recognized that this maybe wasn't for me, and there's a different path for me. And I went back to Penn State and got my business degree in finance, and sort of completely different than what I'd ever learned before. Right? I never took an accounting class until I was in my late 20s, and I never really thought about it. And learning more about it started just becoming an infatuation for me, just really learning as much as I could. And this was the pivotal point in my life, and when I reflect on it, I graduated from my business degree, my
Interesting.
MBA, embarking on a future in not financial services, but as a financial analyst. And I checked as a good steward of my money, what did I do? I checked my credit score, right? Just want to see my credit report, see what's going on. And I see this massive debt on my balance that I was not familiar with. I said, "Okay." My first instinct was, "Oh, I'm somebody's scamming me. Somebody has it as identity theft."
Okay.
I go to find out after uncovering it, it was actually my mother who took out money under my name
No.
because they were financially strapped to the point they had to actually go into debt and take out money in my name because their credit score was ruined.
Right.
And it really hit me hard because the struggles that they went through to get to this country and succeed in life, to go down to that level, something I know she didn't want to do, right? It was just desperation. And it sort of hit me. And after I got through the shock of it, I said, again, this was a reinforcement to me that we have to own our futures. That includes our finances and business and relationships. But if we don't do it, people are not going to do it for us. And unfortunately, I had to witness that pain that really has sparked me to make sure that I do it for myself and my family, and help as many other people do that for themselves and their families.
Love it. Of course, this is a common struggle. This is a very relatable situation, by the way. Of course, I don't want to too generally say, be too specific, right? But a lot of Asian families, third world countries, we experience this a lot. The financial situations. Your family takes out money in your name, you have no idea about it. It really takes you on for a ride, takes you on for this wow. It makes you question everything. And it's very, very difficult. But you took the journey to overcome this somehow. And you took the journey like, okay, I'm not going to let this happen to me. I'm not going to let this happen to my family ever again. When did this journey begin now, Tom? And of course, the journey is always to financial freedom, the buzzword. We're trying to redefine that in this episode as well. But getting to that point, what was the journey like? And how did you come up today to now being part of Perennial Pride?
Yeah. And so it just like a lot of things, as I migrated into the world of finance outside, sort of with research from school, I went into a job, right? Like
Right.
a lot of people do, right? I got into a job, worked for a large corporation for many years and in the finance sort of space. But, as I started learning more about things about and outside of my job, right, I started investing, right? Learning about investing like a lot of people do, started learning about the markets and just exploring. And, as I got into it, I thought I was learning the typical advice and, save as much you can at the
Yes,
time.
of course.
Everything in the stock market was the kind of
You
go-to
wait.
place, right?
Right,
Started getting
exactly.
popular and, in the typical advice. And, and then you get experience things like 2001 and 2008. And I sort of realized that this is a little bit unnerving for me
Mm.
because going through these cycles and hits of recessions and sort of big market crashes, I said, this doesn't feel overly secure, right? Yeah, it's okay to have some money there, but that sort of went me down a different path to say, what are some of the wealthier folks doing? And a lot of it sort of migrating towards business ownership, real estate, owning assets versus investing in sort of like say a company that you have little to no control over. right,
Yes.
of where it goes and all the economic aspects around it, right, that felt more tenuous to me. Like, so I started learning about real estate and learning about that more primarily because I said that was where a lot of people were making money and passing on assets for generational wealth. I just started learning that. So that's for your audience members, maybe they got into it, like Rich Dad Poor Dad, like those sorts of fundamental areas of saying, okay, how do you think differently about money? And it sort of really struck a chord in me. It took me a while, right? Because I'm a researcher. I like to learn and I
Uh-huh.
go cautiously. But it took me a while, and I started dipping into that world. And I moved away from my own financial advisor because they were only playing in a very limited space of the typical financial advice,
Of course.
which is a system.
Mhm.
And to
Yeah.
me, I try to break away from it, right, and learn more about how other people are managing their money.
Of course, I love that, Tom. Of course, today you are part of the Carino Pride, which is the financial management group that you are heading. Talk to us about that. Talk to us about the strategy surrounding Carino Pride. What do you guys do? How did you come about founding this? But also, how much of your strategy involves advanced insurance strategy, and how much of it also involves real estate investing?
Yeah, because so a lot of it is centered on focusing on maximizing our dollars, right? Because
Yes, yes.
we are typically trained. You're working for a job, and people maybe have experienced this, being in that world. Just put your money there, defer it for as long as amount of time, forever, so you can someday retire, right? That was the sort of goal. And so when I started thinking about this, and I said, why do I need to defer a lot of things, my life, my money? I said, how can I actually enjoy more of it now? And so the thing that struck a chord with me, especially around, say, Rich Dad Poor Dad philosophies, how do you build cash flow, right? And
Right.
managing it now to help you live your life. And that idea of some people's financial freedom sort of definition is, well, how can you build enough passive income through asset ownership, whether business, real estate, other things that can fund your lifestyle so that you can actually focus on things you want to do, right? And enjoy. Right. And that's a very different sort of mindset versus, hey, let me work for 30 years at this job, build up my 401k, and then maybe when I'm 60, I get to enjoy it more. Right. And then do nothing. Well, that really didn't appeal to me. And so I was able to build up enough assets and income to leave my corporate job and start Radio Pride, right? Because I said, I could do this, right? Other people will potentially benefit
Yes.
and build their own nest egg and then actually live a much more fulfilling life. Because
Yes.
that's really ultimately what we want. That's
Truly.
what financial freedom gives us.
Exactly.
To be
Exactly.
able to live the life that we truly want and actually I think become who we want to become, right? Because I started bringing pride not just to make money and give financial advice,
Yes.
but free people from a system that potentially keeps them in a spot that they don't even want to be in. It's just that they've given up in that world,
Absolutely.
right? And that's how I felt.
I love
And
that.
so this is my opportunity to help others who are looking to do that over time.
Of course, this is very relatable, right? This is very relatable to a lot of our audience and listeners, especially as a business owner, as an entrepreneur. How many stories have we heard where you're like, I don't want this corporate job anymore. I'm going to quit. I want to start a business. It's very common because, a lot of these jobs, unfortunately, aren't just as fulfilling. And we need that sense of purpose. We need that sense of that we're doing something with our lives and not just, paper pushing until we're 60 and hopefully we, like you said, retire at a comfortable life that we want to have. You've sort of redefined you definitely redefined the financial freedom aspect of there, because we just want to live a life that is fulfilling to us. And you've gone out of your way, a long way, to achieve that for yourself, and you now are teaching that to all of us today, of course, through Perennial Pride as well. Tom, talk to us a bit more about what you do. But in fact, actually, what I really want to ask here is, what is a typical strategy? You talk about real estate, you talk about putting up assets, but isn't real estate finite? Why not stock market?
Yeah.
There's only so many properties to go around. So if I were the typical audience, regular Joe listener right now, I have a business. or maybe I have a corporate job. What is a typical strategy that I can do right now, start tomorrow, right off my couch?
Yeah, because, and this is where sometimes you almost have to step backwards and slow
Yeah.
down to go fast. And what I have come to realize over all my studies and being around other very, very intelligent financial minds is that we are, by the general population, pushed to get into investments too fast, right? Before our foundations are all built around our financial world. And the foundational pieces of our lives, right, are core, right? One is
Yes.
about education, right? But it's also about all the like protection arms of our lives. What I do know is that we eventually leave this earth someday. And I don't know when that is, right? And there's a lot of other risk in this world that we cannot control. So what I've seen for a lot of folks is that that foundational aspect of our financial lives are broken or mismanaged. And they're just one bad day away from financial ruin. And so we start at those foundational pieces because just like a house, if your foundation is not super strong, you can build up all you want. And that house of cards can quickly fall down if that
Absolutely.
foundation is broken. And so I try to minimize the leaks, the financial erosions that are happening, whether through interest going to banks, to taxes, to fees going out. Like
Yes.
that massive amount of money, if that could be recaptured, allows you to go save more and invest more. So a lot of the focus we get is, just save that little amount that you can have left over, and hopefully that grows whatever. Throw it in the stock market at 8 to 10%, and you'll be fine. I want to get more of your wealth going, right?
Of
And
course.
compounding and growing. So that means to recapture as much as you can now and redirect it back to you as opposed to what is typically happening. Most of our dollars are flying away from us to banks, financial institutions, companies. They're controlling our wealth. And I said, I had to reverse it and say, how do you do that? So
How?
one of the core strategies we use is infinite banking, is family banking. This is something that some people have heard, especially business owners may have heard this. It's some of it's been popularized by Nelson Nash, the Becoming a Banker, but
Yes.
people have heard it through the Rockefeller family, and
Yes.
that's just
Also.
part of their broader strategy. Control the storage of wealth, safe dollars, and then control the financing aspect, which is a huge component, which we
Yes.
all need in life. Finance our lives, finance our business, our investments. Well, how do you control that? Well, who does that today? Typically banks. That's where we store money. That's where we go borrow money, right? And so this is a foundational piece that allows us to keep money moving under our control and actually protects our number one asset, which is us
Which
and
is
our
us.
ability to work and earn. And so that is a foundational piece. And from that, we pivot and we go into business and real estate,
There you go.
whatever it is that you want to invest in. And that's why I don't say it's one or the other. This is why it's personal. Whatever it is that you know best, that's where you should go invest, right?
Absolutely.
Right. And that's why stock market, most people don't understand it. They just do it because it's a default mechanism, right? I'm not saying that you shouldn't. I'm just saying that I prefer to have more assets in things that you can control, which
Absolutely.
in my mind reduces risk, right?
Absolutely.
And then you
Especially
get
like
back to where it goes.
I love that you don't give away the control to the institutions. We feel like we've been taught to like have more security when we give it to banks, but really when you think about it, the banks can just decide any day to stop giving it to you. Right? You can never get it any this has happened so many times, so many instances that it's the legitimate fear of not being in control of your own assets is very real. Now you talk about family backing. Is this something that any regular Joe can just get started? Like in any way at all? Like tomorrow I want to start a family banking. What does it entail? And how much does it take really to get started?
Yeah, and a lot of it, if you go back to the basics of it, and I heard these here now, I think it's starting to get more popular, like thinking from first principles,
Okay.
right? The very basics, right? What is true? We need to store our money somewhere,
Exactly.
right? Right? You have to store it somewhere. It's very basic. We make money. It's got to go somewhere. So obviously, right now, most employees, I know you have more business owners, that money, one, goes to a financial institution through maybe a direct contribution through 401k, and taxes are taken out, and then we get to what's left over and it goes into a bank, right? That's typically the flow. And so then the question is, well, what if you just redirect some of that bank money and put it into your own bank, right? This quote bank. Now, it's not a physical bank, right? It's just a different financial tool that you can sort of start storing wealth.
Yes.
And again, this is a long run strategy, right? If you're thinking generational wealth, this is like building a small family banking business in a sense, right? And you're building up, investing in it, and storing it. So think of it in that sense. It's the same as if you're plowing money into your bank, right? It's just a different bank, right? Different financial institution, and you start building it up. And so the core basis of it is specially designed life insurance. So it isn't your typical insurance policy. This is one that is more directed towards cash accumulation than death benefit. There is death benefit because it's life insurance, but designed properly, you can store more wealth in there than a normal policy. And that's the design of it, right? Death benefit is important, but it's almost secondary in this, right? It's kind of good for the ride, right?
Exactly.
Yeah, so you have it storing there and it builds up and then, it gets very mature and there's no chance of loss. So it's also protecting your family and business, actually.
Very interesting.
And then you control the financing piece. You're just literally borrowing from a different institution, this being a life insurance company, but you control the terms of it. You pay it back when you want, right? And you have ultimate control, and it's guaranteed to be there for you when you need it. You don't have to apply for it, right? They're just using your cash as collateral to borrow from them, and then you control the terms of when you use it. So for real estate investors, business owners, it's a tremendous tool of control and freedom because it's all balance sheet. It's not like on your credit score,
Yes,
on your credit report. This is you in a private organization that you're transacting with. You can control the nature of that relationship, right? And so that's the freeing nature of it for business owners, real estate investors, especially, for sure, because you don't have to go ask for the money to get it approved. You're guaranteed through the loan provision and the contracts.
This is fascinating concepts, of course, and for all our audience and listeners out there who hasn't had encountered this or probably just heard of it. In my case, Tom, I have some insurance background. We literally, our family was a huge, massive. We were one of the big regional branches for a while, and so I have that experience. But this concept really wasn't something that we focused on, right? This concept was really, insurance. You just protect life. The death benefit was the main focus of it all, which is, has its uses, of course, right? But Tom, now you're introducing to us this concept of family banking. In one way, I'm thinking like, how is that different from just also giving my money to an institution basically who is connected to another bank? But you're telling me that there's a lot more control when it comes to having your own family banking. But what you're also teaching us today, Tom, is that you started with a whole life insurance. Am I correct? So this whole concept revolves around putting your money into that whole life insurance and it acting as your bank where you have more control over it, because understanding insurance policies, there's a lot of, basically there's a lot of guarantees in there that gives you a lot of control. Tom, unravel this a bit more for us. Does it start with whole life insurance? How can one guy, me, a regular Joe, start tomorrow and maybe, I don't know, look for whole life insurance, policies where I am? Of course, not everything will probably work. What do I need to start looking for?
Yeah, so it is whole life, and some people will use different types of varieties, but we use whole life because it's the most stable, right? It's actually putting the risk on to the life insurance company. These other ones, whether you call them universal life, variable life, you're giving up, you get some potentially a little bit more flexibility, but you're actually giving up control, right? And now the risk is on you. That's why for the banking purposes, for stability, again, we're talking about foundation. Like, this is a product that is never loses, right? Guaranteed by contract. It's a legal contract. And so these policies, and they are set in a way with insurance companies that have to act in a much more stricter manner than even banks, right? They can't just create money from thin air. Like banking, Like, this is a much secure environment because they have to ensure they have money to pay out death benefits.
Precisely.
So there's so much more regulation around it and safety that they have to hold more cash. Banks can take our money and just loan it and create money from thin air, literally,
Precisely.
right? And it creates inflation and other distortions in the market. This is a much more stable environment, right? And it's been around for 100, well before the stock market, right? This is
Yes.
200 years, right? This is a stable environment that's where we want to create these sort of private contracts to store our wealth, right, and act as a financing source. So yes, it's not an investment, and this is always the sort of discussion around this when people say never do this, and frankly, I never say never do anything. This is a educational moment to learn about all these things and see where it fits you, right, in your world. And I said, because they're comparing it to an investment, which is hopefully going to bring you higher returns.
Exactly.
Right. And it comes with risk, though. This is a riskless process, right? Compared to a banking environment, quote unquote, riskless, right? So that's how you compare it. And
Precisely.
so for someone who's maybe starting off, it really gets back to basics, like cash flow. Like, you're already diverting money somewhere to store wealth. How does that happen today? What's that amount, and where can you redirect it, right, into your favor, right? So that's really where it starts, like understanding where people's cash flow situations. And again, this is not for undisciplined people, right? Because you have to be in control of your own sort of situation, and sort of, if you're going to borrow against your assets, you have to be responsible. Like, people do this with their stock market portfolios or their house, right? You can do a similar process, but the asset itself that's backing it is different, right? It's less stable, right? This is a stable one that's contractually obligated to go up, right? There's no downside to it. You just have to continue to stay with it long term. So it's hard to describe like an amount, but you do have to recognize that it's really about, like, how much cash flow is available and how can we free it up by doing some of those other things. That's why in our practice of Perennial Pride, it's about, how do I mitigate taxes, right? Because that's
one thing.
That in our
Huge.
financing and financial institutions, those two are the biggest expenses we're going to face in our lifetime.
Yes.
Interest to financial institutions and taxes, right? How do I collapse that and reduce it so then it puts more dollars in my pocket, right? And then I can start building up and storing wealth, and then going and invest in things that I know and can control. That's the recipe, because the more you do that, I think in my mind, it's a less risk, and you have more dollars working over long periods of time.
Of course.
Right? That's just simple compounding.
That's
right?
it. That's it. I love that. I love that concept. Tom, I wanna clear up a few things, of course, that we make sure we don't have any misconceptions here. You're talking about whole life insurance as a very stable asset that you can borrow against. And this is what sets up your family banking, so to speak, right? Talk to us, expand it a little bit more so it's very clear, but also in one aspect you said, like, there's a risk to it. Well, I'm seeing the risk as like the death benefit. The only time I get my money is when I die. I see that as a big risk, but it's a misconception, of course. And talk to us, you try to shoot down a lot of these myths, of course, around family banking. Now that I have borrowed against my whole life insurance, of course, that depends on where you are at. If they do accept that as an asset, how much are they going to let you borrow? You borrowed against it. That is your bank, so to speak. But that loan came from somewhere. It also came from a bank, and you need to store it somewhere, and you're going to store it in your bank. It kind of, like, how we're going in circles. Talk to us about that and unravel that to it a little bit.
Yeah, so part of it is dealing with a private institution. So
yes,
imagine you're creating your own bank, but you're putting money and storing money at a private institution, a life insurance company, a private life insurance company, and you're actually partly investing in them too.
Yes.
Right? Because as part of this sort of agreement is that as insured members of that private institution, we obtain dividends, just like you get from a corporation. That you maybe invest money in the stock market, the shareholders get the dividends, right, and profits back on the company. Well, this works the same way, right? In terms of the life insurance company, they're profitable, they're managing their risks and expenses well, profits come back to the people who actually are insured members, who are members of that organization. And so we share in that profitability. So we're basically borrowing from the institution we're investing in, essentially.
I
Right?
love that.
So
I love that.
then we benefit. So the more that they do, the more profitability they get. We benefit in the long run. And so for people who are doing term insurance, which is a good thing, like I think there is a need for it, but vast majority of that money never ever materializes because that term insurance will run out before people use it. And that's fine. But that's all cash flow to the organization that we're part as profit sharers in that mix. So for me, when we look at the cash flow and the cash value buildup, and it's like equity in a home,
Yes.
right? Equity in a home, like you were to borrow from a bank, they're going to shield themselves about 20+%, like cushion, like because banks know that a house value can go up and down. Well, for life insurance, they actually let you take on way more. They can give you almost 95%, 90 to 95%. You can borrow against that, and you pay it back when you can. So there's no monthly payment you have to subscribe to. It's on your term. That's why I say you have to be disciplined with it. You have to kind of act as your own banker and be responsible. It's not free money, right? But you have to continue to manage it. But your cash inside that policy continues to grow undisturbed because you didn't touch it. You just use it as collateral, right? That asset grows. Think about the biggest players in the world, like an Elon Musk. He'll never sell his stock, right?
Absolutely not.
Because he doesn't want to realize a gain. Well, it's the same sort of concept here, right? You have gains in here and you just borrow against that asset and you never sold it, right? So you never realize any gain. So here we can extract money from this through loans, but you can withdraw it, right? It's just like, so the one interesting provision within these sort of contracts is all the money you put into it, you can get that out through withdrawals, just like a bank account first, right? And then all the gain, the way to get at it without taxation is to borrow against it, right? Don't actually liquidate it. So if you did that and you follow that through and say you died with a loan, your death benefit, which is leveraged, will pay it off. And then the rest goes to your family, right? Or wherever you want it to go. So it's a leverage play, just like any other leverage play. It's just a safer asset. And then, obviously there's a lot, at least in the United States, huge tax benefits around it.
Absolutely.
Right? The tax code loves it. They want us to protect our families.
Absolutely. Right? And that is a circle that we want to be in. This is a circle that we want to go around in, basically, like having a stable asset, borrowing against it, making sure to borrow against those gains, and just, having that little pool of all those other people's, like, kind of like you're in this together, so to speak. You're in this together with Perennial Pride, which is the website, by the way, perennialpride.com. Where else can we connect with you? Where else can we learn more? This is, anything else you'd love to share?
Yeah, absolutely. I have my own podcast, Perennial Pride podcast. We bring on a lot of different guests and learning about different alternative investment classes and how to maximize our wealth, right, through mitigating taxes, mitigating risk. So that you can learn more. And I did write a little book for my, it was meant to actually be for my children when I first started writing it. It's called Wealth Beyond Numbers. And it really talks about like how what I've learned over the course of my life that's helped me stay abundant in all areas of life, not just my bank accounts, right? How do I live a much more healthier, more abundant life in a lot of ways, health-wise, mentally, emotionally, and, trying to balance that as much as possible.
I love that. Of course, ladies and gentlemen, make sure to go check that out and make sure to go check out perennialpride.com. Tom, this has been very enlightening. Like I said, I set a time limit for these things, but I have way too much fun. I have I wanted to ask all these questions. Of course, and that's of course to clear that up for our audience and listeners as well. Tom, one last bit of wisdom, anything else you'd like to share, take us home.
I said, financial freedom, like I said, can mean a lot of different things to people, but what I've come to realize is that what freedom it means to me, and I assume it is for you as business owners and trying to take control of your lives, is that I'm free when money isn't the main reason I do anything, right? I'm doing it for the reasons for society, for myself, for a broader purpose. And money is the tool that helps to bring that alive. And so once we can sort of shift that mindset, then we are probably positioned to do just amazing things way above than even thought. So I encourage you to sort of keep seeking, keep getting educated, joining folks like Joshua here, and keep growing.
And of course, joining the Pride over at True Union Pride podcast as well. And we've come full circle, the circle of life, so to speak. We've come full circle from the question of financial freedom to now the last bit of wisdom and everything that you've taught to us today, Tom. Thank you. Thank you so much for being on the show.
Thanks a lot, Joshua. Really great.
Fantastic to all our audience and listeners out there. I hope you guys enjoyed this episode, and we will see you on the next one. Bye-bye.
All right, so here's the thing. We try to get a little bit better every day, but we can't do it without you. So if you like the video, make sure to like and subscribe below. And if you have any comments, just leave them in the space under.